Hello, this is Mitch King with the Monday, December 29th Daily Stock Report from TradeStocksAmerica. Let's start with taking a look at the Treasury bond market. We've looked at this twice in the last 6 weeks. The March 2009 Treasury bonds hit 142 in the several times in the last couple of days, and this is just a phenomenal run from 112 to 142. That's about a 27-28% gain on a bond. So you would have made that much money, 25 to 28% on the market value of that, plus the fact that you're getting a small coupon rate. The reason why I'm showing you this is that the mortgage rates are very likely to be at their all-time low for probably the rest of our lives, is what I'm guessing. A lot of this is artificial with the U.S. Treasury buying the bonds to drive the mortgage rates down to help the banking and the housing crisis, mostly the housing crisis, and for the end consumer. So I have a note in here that if you have any inkling to refinance your mortgage or buy a house, this would be a really excellent time in history as far as mortgage rates go and probably as far as housing prices go. I think we're really close to that bottom, especially in places like California, Nevada, and Florida. I don't think there's a trade here. I don't think there's a trade here from a stock point of view, unless you're willing to short bonds, and that's generally not a winning strategy. Although I have a couple times in history done that. Probably about 10 years ago this happened. It's just not a good idea. Let's take a look at the NASDAQ composite here. You see basically what we call in the technical analysis consolidation, where it's going flat and slightly down or slightly up. I describe this as kind of a meandering style of a market that isn't making a strong move up or down. My hunch is that we'll start to see some buying here probably sometime in the next week or two. And I'm thinking that we're going to get some intermediate trade positions long that will start working out for us this coming first half of the year. Here's the Dow Jones, looks very similar. S&P 500. S&P 500 looks pretty much the same. Let's take a look at a couple short ideas. Here's Rambus Technology. The stock came from right here at $5 in late November. We just hit about just under $17. Starting to turn over a little bit the last couple days. We're seeing the MACD right here flattening out and turning over. OBVs turned over just for a day or so. And for aggressive traders, a small position really would be worth it. And I'm having a target price of about $10, which would give you about a 50% rate of return on this short over the next several weeks. You have to have a pretty high risk tolerance for this kind of trade and have a wide stop of probably about 5 to 6, 7% swing against you. Here, let's take a look at some of the housing stocks. D.R. Horton's clearly on a downtrend here. I would wait for it to bounce back up before you open any short position. This whole sector looks the same. If we look at Toll Brothers, CTX, which is Centex, Pulte Homes, KB Homes, Leonard Corp. I'd wait for some sort of a rebound next week and seeing if there's an entry point to short next week. So keep an eye on this. Let's take a look at some swing trades. I'm looking at watching Bank America for further decline in the stock prices to give us a swing long position. I like to see some sort of acceleration of the price going down, as well as an acceleration of an increasing volume on this stock. Let's take a look at one more stock as PLD, which is another short opportunity for a swing trade. Real Estate Investment Trust. It came from about 250 down here, and we just hit 1470 yesterday. It turned over to 1225. I think there's some money in here on the short side for up to a week. Again, this is a little more aggressive for those aggressive traders. You have to have a little bit higher risk tolerance for this kind of strategy. Don't try to make a lot happen this week in terms of a lot of excessive trading. We don't have all the players back in the market, so it's not going to act correctly. Don't get too leveraged. Have small positions I'm going to start giving you more and more long ideas on the intermediate timeline, as well as some long swings. Be a little careful when shorting. I wouldn't go blindly shorting a lot of stocks because I think in general we're going to start seeing the market head upwards. You guys take care, and we'll talk to you tomorrow.